What's up, market makers? It's Brendan from Market Makers. It is that time. It is Tuesday, 5:30. All the markets closed. We're going to go ahead and cover BTC, and then I will get another market update video for the stocks, and I will probably publish that before the markets open tomorrow morning so you guys can have some coffee and watch that. Let's jump right into this. So you guys can see my screen. You're probably wondering what this is. This is a Japanese Renko chart. So what I want to show you here was really just something interesting as far as patterns go. As you can see, this is the first push-up that we've had since the all-time high utilizing Renko blocks here. So this is nice to watch, nice to see. You can of course lay out your fibs and everything just like you do, but you don't get as many areas to do so. So let's go ahead and look at some Bitcoin charts. Here we are with Bitcoin. As you guys know, we have this resistance above us. Bitcoin's making a lot of really good progress. I know to a lot of people that maybe don't follow it every day, it doesn't look like a lot, but it is. You actually climbed above the 1 fib at 43,727, and on the smaller time frames, you were making an accumulation box. So we're going to go ahead and focus on that as well. Right now, price is at 44K. So this is all good. And of course, on our moving average front here, we are above the 55 on the weekly, which is huge. Okay, that's a really big thing to be above the 55. Let's go ahead and look at the daily. The daily, you guys know I have this pattern in confluence with the VPVR for volume. And right here, I do believe we'll have a lot of resistance at 47,260. And again, on the daily, we climbed above, I think that's the 55. Yeah, the 55. And you can see this wick. This is why it's important to look at this wick on this candle right here, the shadow. That's what it's called in Japanese candlestick trading. This is very important to understand the tools that you guys have that are available to you in TradingView. If you're using TradingView or another platform, looking at your EMAs, understanding the EMA numbers. Because if you just look at this and you have the typical, 21, 34, 55, you're like, oh, I'm above all these. If you lay out the 89, most people probably don't use that. Look exactly where that wick hit. That shadow hit right on the 89 and got rejected. Okay, so this really helps you find these resistance levels. It's very important to see that. Also to note, you have a very low volume area right here in this trading range. You can see that these candles here on the VPVR, which means this is going to be an area that's going to be easy to pump into. Okay, so that's why we got that pump. We got a rejection, so we're reaccumulating for another pump. I'll show you that in the 4-hour time frame. And this big candle right here, this is going to be your peak volume resistance. But the good news is if you flip it, that means you can use it as support. Okay, so that's one other thing to keep in mind. Let's do some TA on the daily, but let's do it on a clean chart without the patterns and everything. So I took off the fibs, took everything off here. Let's do a couple of things here. One thing that Gann and Wyckoff like to do was establish 45 angles for trading. Okay, so I can use a Gann fan and do this way. Something like that would be about a 45. You can take this projection tool, which is right here, and you can't lock the scale here for TradingView, unfortunately, at least not that I know of. So I do a projection tool just to see if it looks like a 45. And keep in mind, if you squish this up, it's not going to look like a 45, or expand this, it's not going to look like a 45, or if you go like that. So you have to kind of gauge it for the, I guess, the view that you're using and try to be realistic with it. And then I can do the same down here. Draw this on the candle, even that up, and then I'll take my Gann fan. 45 angles, like I said, Gann was a mathematical trader, and 45 angle using a point and figure chart was very important because that's just X's and O's, and this establishes what's called, this is your supply line. In other words, this is selling, right? Selling pressure. Gonna make this red. And this would be your demand line over here. So you could always change these colors too. I do this on a lot of my charts to look, it helps establish trend. And so this is demand line. The idea here being if candles came through this line, they have a proclivity to go bearish potentially. If you're bullish, you'll stay above a 45-degree angle, okay? Those squiggly lines. So We have a supply line. You can see the breakout here clearly on that candle. You can always find confluence with how you lay things out. You can see clearly that candle was a nice breakout. We had a nice breakout here, broke through the supply line. We are now in the demand line and scaling up. And utilizing Wyckoff, like I said, on the daily time frame here, it's much more difficult because it takes more candles to get to determine things like your trading range and stuff, because right now that's definitely a buying climax candle, but we don't have an automatic reaction yet really to establish a base. But on a 4-hour time frame you will. But let's look at some things here on the daily, because the daily is a really good time frame. First thing I want to show you guys is a polynomial trend regression bands. Okay, this is a Donovan Wall indicator. I've talked about him before with the Caterpillar. Highly suggest you go on his page and just download all of his indicators and see which ones you like. Because if I showed you this indicator, when I tell you this guy is extremely intelligent, there's nobody I see in the programming space that programs the way Donovan does. And just look at the white paper on this thing. I mean, this thing is insane. So this is his write-up on this indicator. So I'm not going to sit here and explain it to you. You can see the you can see his calculations. This is one indicator, the write-up he did for it. Okay, this guy, I don't know what his background is. I think he's an engineer, but extremely intelligent. Anyways, I use this all the time. The bands function almost like Bollinger Bands as well, but it gives you a trend prediction. Okay, you can see it has a median line. You'll see a common similarity in a lot of Donovan's indicators. He likes to have a median line, and he likes to have projections, and a lot of them encompass something else. This is based off least square LSMA, least squares moving averages. It's a deviation or derivative of that analysis for least squares moving average. He based calculations off of it. But look at the projections, what I want to focus on. 66,493 based on current trend. So based on a current trend, I have this set to 100 bars on the daily time frame. So roughly just over 3 months, okay? So based on current trend, the projection for this would be 66K. And he has your first level of or your ceiling, I guess you could say, what if you want to call it a ceiling. Obviously this direction would change as it goes up, but that's at 55K. So this is really interesting to look at, and you can do this on different time frames, and you can adjust the candles. I don't adjust anything except the amount of candles that are counted sometimes. It's a very complex indicator, so I just leave it to his defaults. Let's look at our RSVVB, one of his other indicators, the Caterpillar. You're starting to bottle up again. One of the most important things that we did with that pump on the daily time frame was get us what? Above the median line. You see how it's starting to bottle up? Now remember, on the daily, everything's going to take longer to happen, but you can get this amount. You have to go back, because remember the different time frames, like the 4-hour, 1 hour, you might get super tight on a 4-hour, 1 hour, but the daily is not going to be the same as far as constriction, right? So this type of constriction here got you this massive explosion. I mean, this is what? This is price at 39 up to the all-time high of 69. Okay, so this is a 30,000 point move based off this type of constriction. So just be aware when you're looking at this indicator, it's going to vary in time frame to time frame. So just scroll back to see where you're at. But you can see red median line downtrend here the whole way since the all-time high until yesterday. Yesterday you're green, and now you're green. Very key to hold this, of course, and you can also look at this as support, and you can also use your fibs that we have on the other charts here showing you where you're holding your support line. Want to hold that median line because you want to be green for launch, right? You want to be green for launch for the next pump up. And again, this is accumulating, and I'll show you this on the 4-hour time frame. But let's look at a couple other things. Let's look at Ichi, see where we are at. Where we also, this is the accuracy of Ichi, okay? By the way, I know a lot of crypto people change the Ichi settings for the clouds. The indicator that it was designed, I use it the exact way it was designed. I don't change it for this marketplace, okay? So it's a measurement of time, and it does resistance, and it's a predictive indicator. I don't change anything just because it's crypto. There's guys that double and triple the numbers. You see it when you watch their YouTube videos. They have these gigantic clouds that are totally inordinate. They don't look right, and it's not a true measure of resistance or support. So I don't like that. There's actually videos of people comparing. I'm not going to get into that. There's videos of people comparing the types of Ichi, because using cloud trading, guys, I've been cloud trading. You know, that was the first method that I learned after I learned Japanese candlesticks. I learned cloud trading, but use the indicator the way it is my recommendation. And you can turn off, you can change the moving averages and things like that. The default is 9 and 26, which is not a coincidence. It was designed that way by the maker. A Japanese guy was designed that way by the maker to match the MACD. Okay, so that's why you had the 9 and 26. Now I changed that on mine. Mine's like, I think 13 and 34. And I changed the moving averages, but I don't change the cloud settings at all. I think it's really important to keep it. It gives you an accurate picture in your mind, and your eye gets used to seeing certain size clouds, and they repeat themselves, and you know what you're up against. So it is, you can see here we hit the edge of the cloud, which is also the 89 EMA. Okay, because these are visual representations of resistance or support, and you can see this cloud tucking in. So you can see this cloud starting to tuck in, which means it's going to potentially start getting thinner, and you get what's called a Kumo Twist, like you did here, which is one shape or one shade of the cloud going from green to red. Or in this case, you can see the little green line starting to stick out. You're going to be going from red to green. This is a Kumo Twist. This is because Ichi is a predictive indicator, and it's suggesting that price is going to come up, and then underneath price, you're going to have a green cloud. So cloud trading is really cool. There's a lot of books on it. I would highly recommend, if anybody's interested in it, to read about it. Of course, I have a couple training videos in my Discord channel as well that I made for people. If you guys do decide to check out the room, lots of education in there. Let's turn that off. Let's see where our VAMA is, our volatility moving averages. See, we're split here on the daily. We got above one, we have another one above us. So we're right between them on the daily. If you pump above this at 52.7, I mean, you're getting really, really super bullish at that point. That means all the volatility is going to be below you on the daily as well. Let's check out our trend channels. I think it's going to be cutting right across us. Yep, there you go. Trend channels are super accurate. Gives you a median line. As you can see, using different indicators, we're at the median line or just above the median line on multiple types of indicators. So this is really good and bullish for price, and how everything's lining up right now. And let's see, 55. We are above the 55 on that pump too. Okay, so that's really good. That's strong. This is the daily time frame. There's your 34, 21. Everything should be below you. Everything is below you. And then the 89, like I said, is going to be right on top of you. You hit the 89. Okay, so you hit the 89, and you got your 144 and 233 slightly higher up. This cluster, this is it. You know, the 47,260. Like I said, if you get above that, you are going to be super bullish, in my opinion, if you can hold it as support here on the daily time frame. You get above 47,260, you're above all of the EMAs, every single one, okay? So you're above all of them. You'd be above the median line in the trend channel, and you would be flipping your Ichi to green on the next cloud formation. So this would be super bullish, and we have that trend prediction indicator from Donovan Wall saying 66K, which would be absolutely phenomenal move from here. So you're looking at a 22,000 point move. And of course, we'll be looking to trade that in our room. Let's go to the 4-hour time frame. 4-hour time frame. As you can see, we have our fibs here as well. I'm going to go ahead and take the fibs off. You guys know these levels, the 43,727, which we are holding, and of course we fell just slightly below it. This is really good, and this is really strong. Let me go ahead and get rid of this fib. Because if you were just going to use a fib retracement here from the bottom of this move on the 4-hour time frame, you're not retracing much at all. Like the 382 is down here. As long, in my view, you're holding your bullishness even if you come down to test this 233, because you've previously, like we predicted you would be using it as support. You see all the candles laying on top of the 233? So that's bullish no matter what. So price can actually come down much more. And you may get this, by the way. You may get price coming down and doing some down thrust into this 233, just like it did here, okay? Flirting with that 382, maybe even wicking it at some point. But price is super bullish, and it's a accumulating. So this is what you want to see. Now let's go ahead and get rid of the fibs here. Let's draw some Wyckoff stuff here on the 4-hour time frame. So as you can see, I don't have the steps labeled out here because it's a 4-hour and they're constantly printing candles. But we had our first Wyckoff box down here. We fell down. We had our selling climax candle. We have our automatic reaction. We have our secondary test, and we got some down thrust. Okay, and this down thrust gave us a spring up. And again, then we have a buying climax candle, and then we were just going through accumulation, down thrust. All the Wyckoff steps repeat over and over. You have up thrust out of the range, sign of weakness, tested our base again, boom, exploded up. Okay, this was all Wyckoff steps, and this is in a mini time frame. Again, just like a pattern on a head and shoulders on a 5-minute time frame is not as powerful as a head and shoulders on a 4-hour time frame. It's the same thing with Wyckoff. Okay, you can go down to the minutes if you want to and find Wyckoff cycles, but it's much more powerful on the larger time frame. So I like to do it on the daily, and I'll use it in the 4-hour as well. So you can see we sprung up. So let's go ahead and mark out some key areas here on Wyckoff on the 4-hour time frame. The buying climax candle, and we have, this could be our base. We could be coming back down. This is an automatic reaction. You can see the candle descension here. Right after you have your climax, you get the automatic reaction. This could be the base right here, okay? And so basically we would be ping-ponging in this box, meaning that up thrust could happen outside of the box. Down thrust could happen at the base of the box or just outside of the box. Like I said, possibly going down as far as a 233. There is no time limit for how long you stay in this box, okay? This is essentially a reaccumulation box is what you're forming right now. Could it become a distribution box? It could. But what you will see is you'll go through the Wyckoff steps and then you'll start to lose key support structure, which again, for me, is this 233. Something to note here, this is a 55 and 233. You see what's about to happen here? You are about to get a bullish cross. If price will stay up above the 233, you're going to get a bullish cross. This could happen tonight, or this could happen, looks like it would happen at the latest by sometime tomorrow. February 8th, we did talk about a pivot, that candle. So this could be the pivot that comes back up on the February 8th candle, which I guess, what is the February 9th candle tomorrow? So we could see something here. You know, the fib time is potential pivot points, but they can also just be continuation points. I think I see that a lot on YouTube. People make a mistake of having fib circles or having fib retracements, and they think when price hits it, that it's automatically one thing, meaning it reverses. That's not what it is. It's a potential pivot point, and it can also be continuation of trend, okay? So what we had happen, I guess you could say February 7th, we pumped up, and on February 8th, this could be our pivot. You see this candle? This was our first candle for February 8th, and we came back down. So the high in this candle was 44.9. The low in this candle was 42. So what is that? A 2,500 point drop? So that could be the pivot for February 8th. And that may be all it is. So now we're accumulating. We have our range established. And when you establish a trading range, particularly in Wyckoff, what ends up happening is, like I said, you go through certain steps. I can show you that on the daily. But on the 4-hour time frame, what you'll have is you have volatility, depending how long you're going to be in this box. Down here, we did not stay in here long. We got down thrust. We exited quickly, okay? So down here, we could have up thrust. We could have down thrust. We could have ping-ponging. This could go on for days. This could go on just for however long it wants to go on for. It could go on for 3 more candles, and Bitcoin could exit and start pumping up. But the way that I like to track this as well, you know that, let me go ahead and show you on the daily instead of just drawing it. So let's look at a successful, let's get rid of these moving averages. Let's look at a successful accumulation box. It'll be easier to show you this than to draw this. This is a breakdown of an accumulation box that flipped to distribution, right? If you guys have been watching this channel, huge selling climax candle. You can see the large demand wick, right? Have our automatic reaction, our secondary test, our up thrust, our sign of weakness, and then what happened? Instead of holding support, boom, you exited the trading range. You did the exact same thing here again. You formed another accumulation box, became distribution, boom, exited the trading range. So these can flip. And the easiest way to look at this is to understand your key support structure for every range that you're in. This was a successful accumulation box, as was this accumulation box, which was actually a reaccumulation box in my larger schematic. So you have these steps that you're going to go through on the 4-hour time frame. Selling climax candle, which you already had, your automatic reaction. You get down thrust out of your range. You get up thrust. You get signs of weakness, down thrust. And at some point, you want to see yourself hold key support, which price did here in this accumulation box. You guys have seen me draw this before. There's your key support structure. And you've seen me draw this over here. Oops, here's your key support structure. And I guess I'd put the automatic reaction, probably one of these lower candles. So these are up thrust candles. But you see your trading range. So as long as you hold your key support structure, you get big bullish candles. You will see this often in Wyckoff, okay? You will see this the higher lows get established. I don't know why I've been saying that backwards a couple times on the last videos. So you see these higher lows get established, okay? Even our backup, which is reaccumulation and Wyckoff, people say, but look at price, it descended, it descended. Look at it in the grand scheme of things of how you are trading. You made a series of higher lows, okay? Very bullish. So this is what we'd be looking for on that 4-hour time frame. Same exact concept, okay? You have your low established here. You did not stay in accumulation long. You established a new trading range. You have a higher low, and now we're establishing yet another higher low. So yes, price sold off from here, and it's going to ping pong in here, and you want to see it do the same thing. At some point, it's going to look to start testing this upper range and start establishing another higher low within the range, or just frequently this happens just outside the range, and then that's when you get accumulation and you get more lift off, okay, and price goes up. So it's just a cycle that repeats itself on every single time frame. And again, in looking at this on the 4-hour versus looking at this on the daily this will look like nothing. On the 4-hour, you can see clear steps and you can go through this and label it. Let's go ahead and do a couple other things here on the 4-hour time frame, since it is more current time frame. Let's look at our VAMA on the 4-hour. Should be nice and green beneath us. Yep, it is. Volatility is beneath us. All systems are checked for flight, okay? That's what's happening here. And let's look at the Caterpillar to compare it from what we had on the daily. You're starting the bottleneck up again, okay? You see your median line traveling back up. See, again, look how tight this will get on the 4-hour. You probably won't see that on the daily, but you just have to be aware of that difference, okay? But on the 4-hour, you'll see it wind up really tight like that and then explode. So it's starting to explode, but looking at this, as you guys can tell, this looks like we may be accumulating for a little bit in here. I can't tell you how quickly this will tighten up because it has to do with the volatility, but that's why we can trade with volatility indicators like the ATR, which, as you guys can see, is clearly elevated, okay? Now, there's nothing saying the ATR has to come down. It can pump up higher. It can pump from here just like it did in this range. If you open up the ATR, you can see it could still go up from here, right? It can come all the way up as high as it wants to go. But just typically, as you see, when you make these peaks, and again, you can throw, throw trend lines up here if you wanted to, but when you see these peaks get established, they tend to come back down to trend, okay? And you can see it using trend over and over again for these larger moves that move back up. So that's why I established baselines. But it's just one way to track volatility. The Caterpillar, the ATR, and of course we had volume. This is very, look at these big bearish red candles here, but price held key support. Okay, this is all very good. We had our volume momentum roll over. It's still staying green, but it's pretty much flatline. So everything looks good. I think we're going to be in this box for a little bit here on the zoomed out view looking at the Caterpillar. Looks like we'll be accumulating for a little bit. And again, we already know our projections for where our targets are. We can look at that again on the daily. On the daily, we got to hold 43,727. The next leg up, we want to flip 47,260. Got to get past that 89 first, and then we got to tackle the 233 and the 144. Those are all above us, and if we can do that, all systems are go, and we will be igniting. You see that? We flipped these three moving averages. We are above key volume resistance in range. This volume resistance going back 2-3 months now. We are above key volume resistance. We are above all the moving averages. This 1618 at 50K would definitely be getting tested. We may have to accumulate here to regain some strength, get some more buyers to step in, but we will be testing that 1618. And if we test that 1618, guys, the 2618 target is 61,192. That'll be a fun video to make if once we flip 50K. Okay, because once again, that polynomial trend regression has 66K as a target based on current trend. Let's go ahead and throw that on here, and I'll leave you guys with that. Let's go ahead and throw that on here as well. Let's see what it looks like on the 4-hour time frame. Let's do... get a prediction here. This is 100 candles. 100 candles, see, because you're only going 100 candles back, then you have to keep in mind how you're viewing this. So this would give you a 36K trend prediction, because 100 candles on 4-hour time frame, it takes 6 candles to equal 1 day. So this is all gauging off of the downtrend, right? So if you view it on the daily, you can catch more of the move, or you can always adjust this to make it more candles, to make it equal whatever you want it to equal, 30 days, 100 days. You'd have to adjust the number, but 100 4-hour candles would have you going down. But clearly, as you can see in the trend is going up. So just something to watch, guys. This is a lot of cool different indicators here. As you can see, here's a good example of it functioning like Bollinger Band. See how it tightened up here, and then you get that explosion down. So, all right, guys. I hope you guys have a good evening. Check out our Discord there in the video description. Check out BITGET in the video description. Smash the like button for me, and look for an updated market video tomorrow morning with your cup of coffee. Take care, everybody.